that, but anyway, we want to accept, confirm the decision to participate remotely by Mr. Rose. Is that correct? Mr. Rose is remote.
We do not need to approve.
We don't have to approve
he's
that.
not a member, so we're in
Yeah,
good
so
shape
therefore
there.
you are approved, don't need to approve, so you are, Mr. Rose, available there. And we'll skip item 2, administrative items, minutes. We're gonna skip that. We'll move down to the fiscal year 23 financial statements and audit reports thereof. Mr. Rose, you're on. And of course, Ms. Schickel, you can help him facilitate that. Mr. Rose, you're on with regard to item 3 of our financial report here, agenda for the Audit, Facilities, and Finance Committee.
Are you able to share the screen? Then I'll just put the put it up there, or
Okay.
no?
Do you want me to just share from the packet?
Can you do that? Can you do that?
I can, it just take me, I
Well-
don't have it open, so it'll take me just a minute.
Are you sure?
Well, if I shared, then I can move through the PDF.
Yeah, that'd be great, Mark.
Okay.
We have time. Still getting time.
Hey, welcome. Good.
Yeah, because Mr. Davis is not on.
That's right.
He's
That's
on
official.
Zoom, so
Good.
we have 3 other sites members.
So, great, thanks for, see, thank you for that.
So you're able to see the draft audit?
Can everyone see everything okay? Mr. Peterson, Ms. O'Bannon, and can you all see okay? Good, okay, very good. All right, yes, sir, we can see, thank you.
All right. So to start off, the opinion letter, it's a standard unmodified opinion.
Okay,
So
that's on page 7, page I-7 in our packet.
oh yeah, I'm sorry, I don't have
Yes.
the reference for what you're
That was
at.
just reference for the members here, I-7.
Okay. So that's
Howard J.
like 7, 8, and 9 covers the opinion. And that's a standard, as I said, that's a standard unmodified opinion. Moving into, I guess it'd be I-10, would be the management discussion and analysis.
Yeah,
This is really a place to read, to get an overview of the ins and outs of what happened during the year.
Okay.
So, and this is from Martha and Dan as far as the changes from last year to this year. And
okay,
just skimming through there, you can see that some of the items that catch your attention is now you have a $2 million asset on your books and a $2 million liability. That is because you're now implementing a new GASB reporting requirement for the new lease that you just signed. So, so that generated they want to present it as an asset and as a liability now.
yes,
So then as far as, I mean, those are the 2 big things on the report. Moving a couple pages for a statement of activity. You're seeing the general expenses, revenue, and a net change in net position of almost break even, a little under $27,000 for your change in net position for the year. Now, on the next page for the comparison of revenue, expenditures, and fund balance, this is pulling similar information from the statement, from within the statements. That's why I'm focusing on the MD&A. It includes things that are not in the calculation of net position, such as expenditures for capital outlays. So with those items, I added in, you're showing a revenue less than expenditures of 200,000, but you had spent 193,000 of it, as explained on the next page. Of that, 193,000 was for capital outlays for the new office, and I believe you all had a separate budget that you had approved for that. And then equipment. So netting outside of that one transaction, basically netting an increase of revenue over expenditures of 21,000.
Okay. So page 15.
And so you're on 15, so you're on, okay. And then moving into the, I guess it'd be 17 on yours. These are just a breakdown of the same information that we just went over, a little bit more of a breakdown of the statement of net position. Again, the bigger numbers are the $2 million lease office space, an asset, and a $2 million lease liability. These go down as you pay your lease.
May I ask a question?
Yes, you may.
Won't that impact the fund balance? I know we haven't talked about that directly, but that should be reflected in the fund balance, right?
Well, it is basically in the fund balance. It's reconciled down at the bottom. It's not included in the calculation of the fund balance.
Isn't the fund balance there to, in case we have to just pack up and leave or something, pay off the debt? It looks like they're considering a leased office space.
Yeah.
Pay it.
Actually, the one thing you might reference is note 9, long-term lease obligation, which is what he's alluding to. And the fund balance is actually just more or less cash for the most part. On page 42 of the page, you'll find long-term obligations, lease liability, which is required to present the net present value of the minimum lease payments as of June 30th, 2023. That's what I was looking at, the footnote to that, which is what he's outlined, the principal, and then he's referring to the debt, which is lease off, the asset is $2,003,000, and the liability is $2,045,000. If you, in there between the liability and the asset, and that's what the GASB requires. 87 requires you show it on the balance sheet.
Yeah.
Principal impact in the balance sheet with asset and liability. Okay, Mr. Van Camp, did that answer your question? I'm sorry.
Well, the fund balance is, whatever amount the fund balance is, should be able to take care of the.
Yeah, what you're referring to is the obligation at the time if we were to default or to
Whenever
decide to
it is,
leave,
I get that.
what balance will be available to do that. And fund balance is not to that degree. It's not to that point at this point. We don't have a $2 million fund balance.
Yeah. But the other part is we're gonna discuss, I know about fund balance.
Yeah, we're gonna discuss that, what's reasonable policy that's coming later in the agenda.
That was why I asked the question.
That's why, okay. All right, Mr. Rose, please,
Okay.
if you would.
I guess you would also look at the asset would offset most of that liability, so.
Yes, right.
On,
How is that, if I could, how is that an asset, the fact that we have a lease?
Lease,
We don't own the thing.
that's true, you
We
don't.
own it, right.
We did lease, go ahead, somebody, Mr. Rose, would you like to explain why is that shown as an asset on the balance sheet? I think that's the question Mr. Peters asking. And
We know it's a liability, but.
we know we have an obligation, yeah, but how is it a liability?
yeah, well, I mean, it's an asset as that you have the right to it. So you have the right to this asset
Occupy this
and
space.
you have an obligation for the lease. So your right to it is just as strong as your obligation. And this is, I guess, is more of opinionated, that it's the reason for the presentation this way is to try and line things more up with international standards. But also they were looking to try and bring the information forward from the footnotes to put it out there so people would have a number. But you have to, basically in accounting, if you're going to put in a liability, you're going to have a debit to put somewhere else. in order for things to balance. So you're generating an asset that you have a right to.
Yeah, because we have the right, based on the signed lease, to occupy this space, which is deemed an asset. Is that okay?
I guess that raises one more question.
Yes,
for me,
sir.
though. Does our lease have any provisions for early termination?
It does. We have a provision for
Termination.
non-appropriation of funds. So if in the example that we, needed to dissolve as an entity or for lack of funding, needed to vacate the space, to downsize or whatever, we would have the ability to extinguish the lease early due to that non-appropriation of funds clause.
Okay, so we don't need to have a $2 million backup to cover a $2 million liability if we were to terminate the lease early.
I don't think that the two necessarily, I don't think that the $2 million obligation requires us to have a $2 million fund balance. I think that is subject to this committee's discussion though.
Okay, so,
yeah.
and this is a discussion we're gonna have
Yeah,
later on.
yeah, we're not
Okay, all
required
right.
to have that
We wanted
balance.
to be able to get through the
Yeah.
audit
Okay,
and have
that's
these
fine.
figures
Yeah.
printed and move through the approval process so that then we're having that informed discussion about fund balance policy.
Yeah.
So yeah,
But if
Yes, Ms.
if we had a problem, I know
Yes,
getting
ma'am.
far afield, but we had a problem in the past, as you know, with extra space that we couldn't get rid of. Do we have anything in this contract that says, as you said, we don't need as much space, so we could give up some of
to
it?
sublease, yes, we do. It is, I have to go back and look at those terms more carefully, but I believe that it's just subject to owner approval, similar to our previous situation where we carved out, prior to my coming, I think we carved out that area and we subleased to LMR and Leadership Metro Richmond. And we're able, and then we did that again with Homeward actually, so, yes.
That's all, I don't remember discussing the lease in that detail, but that's what I think you're asking too, is can we even do that?
Yes.
And not have the obligation if
Yes.
it comes to that, for whatever reason.
Okay.
There are options. That
So-
should be the discussion
That's-
of the fund balance.
Yeah, that's a good point, and that's why we'll revisit the lease in terms of those parameters, those requirements. We'll revisit that. Thank you.
Okay.
Thank you for that. Yes. Mr. Rose,
Okay.
thank you.
So the balance sheet of for the general fund balance is what's on the screen right now. And that shows down at the bottom of it, I think it's page 18 for what you have, the reconciliation of breaking out the differences between the net position and the fund balance. The next page, again, these are the same information that was in the MD&A as far as revenue expenses showing the change in the fund balance for the year.
That's right, correct. Yeah, good deal. Thank you.
Moving on to, I guess it's page 20 for you. This is just the fiduciary for the Central Virginia Transportation Fund. That's their fiduciary for it, so it's in and out. So it's just an asset and a liability. And that was the activity for the year with the balancing of $20,000 going back to PlanRVA.
Any questions there, anybody? Go back to that previous page. Which page was that again? I'm
I
sorry.
think it's 21.
Page 21, thank you. Okay, good. That's what I thought. All right, receivables there. And now also, what should be pointed out before we get there, go back to page 19, you'll see the total fund balance of 1.174. Ms. O'Bannon, this is a number you often look at, and you can see what it's comprised of in terms of assets. You can see up above, you'll see the biggest item of all would be grant receivables, 1.5 million for on page 19. Just want to point that out. Page 19, 1.5 million with cash equivalents of $98,000. You see that, Mr. Bannon?
Yeah,
So it's something you often allude to, 1.17427 total fund balance.
well, fund balance should be cash.
Yeah, I hear you.
So grants receivable, that was another question.
That was a question you could have. Okay, and we're gonna, be addressing those concerns. Thank you.
Okay.
We're gonna address those. All right? I'm sorry, Mr. Rose, please go on, sir. I just want to point out the fund balance. Appreciate
And you're talking about the 1.5 million in note 2 on
Yeah, note 2. Okay.
page 26.
Okay,
Is that what it
okay.
is?
If you want to go there to note 2. The one, okay, yeah, there it is. The breakdown of that's on page 26 of that 1.540 grant receivables. As of the June 30th, 2023. That was a significant amount due after that date. 1.5 million.
Dan or Diane, since we're in now the last day of October, can you all generally speak to how much of the 1.5 that were grants receivable as of June 30th have been received?
Thank you.
It's,
A significant portion of that?
I'm gonna say like 75% of that has been paid. I mean, we
Okay,
have a much smaller
closer to a
outstanding
million. Closer to a million.
receivables.
Our outstanding balance in the billed AR is 173,000 as of October 30th. As of 9/30 was 419.
So that's even more than 75%.
Yeah. And we've seen significant payments come in through Virginia Department of Emergency Management in particular.
Okay,
In the VDOT
Yeah.
items are
okay,
collected. The accrued revenue is 580,000. So between the two, that's just under $1 million. So it's come down by a third.
about there, good. That's why I estimate around $1 million paid. So, thank you. All right, Mr. Rose, please, if you would proceed, sir.
All right.
Excuse me.
So I'm going to skip through a lot of notes. If somebody
Okay.
really wants me to go through the retirement plan footnote, that's 20 pages long, we can talk about it. So on page, which I'm assuming is 41 for you,
Okay,
that's just as a breakdown of the contributions from the localities. And it starts the footnote on the right to use asset, where you recognize the asset and you're starting to amortize this lease. So the net of it is, as it says, $2,003,000. And then it carries on the next page with the lease liability portion of it, breaking out the payments, and they're calling it interest because that's how it's being applied. It's being applied a discount interest to calculate the present value. And so now we're showing that as interest payments. So if you then look just below that, you start the calculation showing your fringe benefit calculation.
and at
Similar to
least,
the prior year.
yeah, one comment, the lease liability is discount rate of 3.85%. On page 42, 3.85% discount rate for the lease liability.
Right.
I just want to point that out. Okay. Go ahead, sir, I'm sorry.
That's fine. And then the indirect cost calculation. That ends the standard audit section of the statements. You have your budget comparison, which is showing your operating budget that you had started with compared to expenditures and actual. And then you had an additional capital outlay budget. And this basically shows how you had your change in your fund balance. These are required disclosures for the retirement plan of the funding of it. And then here's your breakdown of federal awards for the year. 0.3 million. And then standard opinion, the unmodified opinion letters on your internal control over financial reporting and on compliance. And then also standard on the compliance for each major federal program. And that ends the quick and dirty presentation. Are there questions that I can answer?
Okay, any questions, members? One question I have, any concerns in internal control, you mentioned report thereof over compliance, any concerns from your perspective?
No, we had no issues, no findings, no concerns that were raised.
Okay.
In talking to VDOT, which is part of the uniform guidance process, they had no concerns. They work well with you guys. I guess I could throw that back at you as the governing body. Are there any issues that you wanted to bring to my attention?
No, none that I have.
Mr. Chair.
Yes, Mr. Peterson, I do have a question here.
Well,
Mr.
I've
Peterson.
got one question right off the bat, because, look at here, we have 6 members of this committee or 5?
6 plus the ex officio.
So
Six.
does
Yeah,
3
Three is
really
okay.
does not make a quorum then, does it?
Well, we
we
can
have to
have
have
3 and a
4.
half, so I think 3 is okay.
We have three.
I believe 3 out of 6 is allowed,
It's 50%.
I'm not sure.
but I'm not,
I
yeah.
thought you had to have a majority.
Well, let's look at the definition of quorum.
Yeah, let's look at that. Check that out. Before we vote,
Before we make any votes.
Yeah,
we're not gonna
I
vote on
apologize, I
anything.
said that.
Yeah.
I'm sorry for that.
Yeah, yep,
Because I think we've typically had 4 for the quorum.
Yeah.
I'm thinking that's right, so I'm not too
Yeah,
sure we
but
can
you-
act.
yeah.
But also, I normally,
Mhm.
I know in Hanover anyway, we always have time that is totally just the board members and the auditor have direct conversation without any staff. I don't know whether that's appropriate here or not, but I don't think it's appropriate if we don't have a quorum.
Yeah,
That's a waste of time if we don't have a quorum.
okay, I agree.
Quorum gets to be defined by the organization. It just
So-
is the minimum number. That's what the definition says.
It's
Always
minimum.
go to the definition.
So are we good or no?
Well, I think,
I'm gonna look up the,
I think
look
we
up
say
the bylaws.
simple.
Look at the
but I
bylaws.
think it says
Yeah,
half.
Janice, appreciate it. Yeah.
Okay, it's
But
a
that-
majority of members of the group.
Majority of members, so we are majority now.
3?
No,
3 is
we're only-
majority?
That's only.
That's all that,
That's
that's half, okay, that's 50%, 50% won't do, huh?
No.
We gotta have 51, right? Is it 51%? Wait, we're having an internal discussion, Mr. Rhodes. I have one question for you. In terms of indirect costs, page 43, 61.39%, how does that relate to prior audits? Is that, I'm a trend analysis individual. Just curious of how did that relate?
It seemed to be higher this year.
A little bit higher, okay.
It was higher by 12%. or
12%.
12% higher.
12% higher, okay, all right, just asking.
With most
Other
of that
question.
fueled by increases in indirect salaries
Okay,
and related fringe benefits.
okay, all right,
And some of the moving items, loss on disposals and
Okay.
capital expenses.
Well, it says you can have half, it's whatever you say in your bylaws, basically.
so that's what Janice
It
is
says,
looking at.
it says majority. I thought it said half, but it does say majority, so
Majority,
that
what's a majority?
half
Half,
is
we are
not.
half, it's 3, but majority means we.
We got the 4,
I'm sorry, I'm just.
probably more likely 4. You're probably right, Mr. Peterson, in that regard, yeah.
Okay.
Okay, and one other question I had, sir, I forget which page it was on. It was, you have a line item for a bad debt expense of 23,969, not significant, but just curious about that item. Bad debt,
Yeah, that was some with the DDM, I believe. Is that right, Dan?
that's correct.
Yeah.
Who's that again, please? DDM?
Department of Emergency.
Department of Emergency Management, thank you, okay. All right, okay. Okay, thank you, All right, any other questions, for Mr. Rhodes at this point regarding this? We can't vote, but we can always ask questions. If not, no other questions? Thank you, Mr. Rhodes, for your time today. We appreciate it. And is there anything else?
Yeah, I would like to ask.
Yeah,
Ask,
Yeah.
Mr. Rhodes,
Mr.
in
Rhodes.
your audit, have
Yeah.
you seen anything that we need to do to improve how we're doing things?
Do you have any recommendations?
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 No, I didn't see anything that would be, I mean, as far as any improvements, nothing that came to mind. I mean, there's always different ways of doing things, but the detail seems to be attached in QuickBooks, which gives you pretty much automatic access to the underlining transactions. You have the oversight as far as controls of the money coming in and going out. So I didn't really have nothing for changes.
All our checks and balances are good.
Yeah,
Our reconciliations in order.
the reconciliations seem to be timely and in order. Yeah.
Good, good. Okay.
And maybe
And-
just tell Dan to work harder, that's all.
Okay.
I'm trying,
Okay.
I'm working on it.
We're hearing that. And in regards to the note 9, just to double check, the calculations for the lease liability, which does, generate journal entries, that was doubly checked and reviewed, the lease liability. This is the first time we have this lease liability on our books. So that's double checked and verified.
We actually, we use a product called Lease Crunch that we go through to calculate the aging and the value, if that's what you're asking as far as.
Minimum lease payments, yes, calculate the minimum lease payments for that, future lease payments as well. Yeah, very good. And the discount rate, as I mentioned earlier, was 3.85% in this case. So that's okay, everything's okay there. I just wanted to double check on that, since that's a new item. All right, other questions, concerns?
Can I say?
Yes,
a couple of
please.
things?
You,
Okay.
you all, sure.
Well, I think,
Please.
it's always good in our audit report to have the evaluation come from the auditor first about our internal practices and to do the review. From a process standpoint, you all may know this, but I don't know, Mark, how many letters you send out to our various funders, or Diane, if it's many. And so while the consultation, I think because transportation is our largest federal program, we do a pretty extensive outreach to get communication directly back to our auditors if there is an issue from one of our funders, and that becomes the basis for the opinion. So it's good to hear that those concerns, there were not concerns aired through that process. Also, just in the documents themselves, I think that the comparison of budget to actual is a useful
Thank you.
document on
Yes, it
page,
is, thank you. Thank you.
what page, sorry?
44.
Thank you, 44. So just to kind of point out, heading into the last fiscal year, we did allocate dollars associated with supporting the move and the build out. So that budgeted amount was $297,000.
Very good.
As you all know, it was reported previously, we came in under budget at 256. So we were glad to be able to report that. And then the operating surplus for the year was 21,000, which was right at where those last spring final predictions were. So I think continuing the practices that we have had in place to really be able to do the quarterly reviews of budget to actual and staying on top of monitoring and tracking expenses and making decisions throughout the year as to whether or not those budgeted expenses are supported with the revenue has proven, I think, to be a good practice for us. Not the $21,000 contributed to the operating surplus as a ton of money, but I think we want to continue to go in that direction, certainly. And I'm glad that you mentioned the fringe and the indirect. I do think that we would look for that to sort of stabilize and go back down in the future. It was 40, sorry, I had it pulled up. It was 49.38% in the
Okay.
2022 audit, right?
Correct.
Yeah,
Okay.
so that's the direction that we want to
Go
to
toward.
go back toward,
Okay.
and I think we've been having lots of conversations about how to monitor our expense allocations and make sure that we've got enough. I think one of the drivers of that, Dan mentioned, there were some factors associated with the move, but I think also the recruitment that we've done these last 5 or so months will bring programmatic billing up, which helps that proportion out quite a bit. So filling those vacant positions not only helps drive the revenue to offset expenses, but it also helps to balance that proportional calculation on the indirect costs.
Thank you, Mark.
So we're watching that closely. We don't calculate it on an ongoing basis, but I think Dan's getting better and better at being able to kind of predict which way we're going with that.
If I may, just
Yes,
looking on this, based on this, I mean, the move, everything, obviously that distorted everything, but
Yes.
what I'm seeing here, that was about 450,000 of the 622 that was a variance. So we still have 170-some thousand there that was a variance, a negative variance from, obviously from operations, I would say on that. So I guess that's the one we probably need to focus, make sure that we
If you look at
give it the
the
proper
top of the
attention.
expenditure line, you'll see pass-through contract services.
Yeah.
That was over our expectation by 790,000. That's the housing grant.
But that's
Where the
also
act-
offset by the
By the revenue.
lack of revenue too, though, isn't it?
It's dollar for dollar. There's more revenue. That's part of the local grants and appropriations excess.
So I think to your point, Mr. Peterson, we do need to, I think, get better at, as we do our quarterly review of revenues and expenses and those projections, I think what we want to try to do is document those with the committee so that it follows a closer trail. We did not do that last year. We did reports to you, but we didn't have meetings where there was an acceptance of an amendment, and so that, I think, is what skews those calculations, so.
I mean, this has been a different year. I mean, I don't think
No, but I
it
think
could be,
it
but
points to
it's,
what we can do differently,
so,
yeah,
And the activity in that one program was significantly more,
right.
which then throws off your expected expenditures. So most of that $600,000 difference is actually found in that one grant. The rest of it, there were a lot of, swapping out.
yeah.
Yeah, so you can see like a lot of that 790 sits in the million variance in the revenue, but I think we can get better at that as we go forward. The other thing that I just will point out, and I don't have an answer for this, but because our staff composition has changed quite a bit, I do think that it's important for us to monitor the implications of that with the Virginia retirement system. And, we have become accustomed to what those adjusting journal entries have kind of looked like, but I expect that in the next couple of years, we're gonna see some different trends in those. And so it's just something I think to be mindful of in the way that we understand our obligations with VRS. And I know, Mark, over the years, you and I have had conversations about that, but a lot of that has to do with the composition of our employees and where they are in their contribution status and what the pension liabilities are. So with a small agency, 1 or 2 changes in who is on our staff makes a big difference. We do not factor those things in to our recruiting process, but it's a reality that we have to understand have financial implications.
Okay,
So I just wanted to point that out as something we probably typically skip over.
okay.
But I think in the next couple of years, we might see more variance in those adjusting entries.
Thank you, Mom. Appreciate that. Anything else you'd like to share?
That's all for me, Dan.
That's
Did you
all.
have
Any other
anything else?
questions or comments, Mr. Van Doren? Anything you want to say?
Mark, did you go over the compliance reports, the CFA? Did you want to say anything about the CFO?
I think he was just super brief.
Just the general compliance at the end there? Oh, no, I mean, I just covered it briefly and indicating that we had no findings or issues in the two reports at the end. Was there something specific that you were asking about?
No, I was probably thinking about something else as you were
Okay.
saying it. But I just wanted to make sure that we weren't skipping over the compliance section. You know, that's the part that is
A requirement, yeah.
required specifically by the federal government for our federal funding. And so
Okay.
to show
Yeah.
that we're in compliance there is important.
Okay,
Yeah, I'd commented on that, but yeah, it was pretty brief because it was near the end of the
Sorry
report.
about that.
No,
okay,
that's fine.
very good. All right, thank you. Anything else for anybody? We appreciate it then, in terms of, the committee accepting, we can't vote to accept it, but we can, of course, maybe do that at a subsequent meeting if need be, and make a recommendation to the full commission.
Yes, I will add this, the financial statements for fiscal 2023 and the audit report were distributed for the meeting materials for our commission meeting on this Thursday, the 2nd.
Okay,
So the hope is that if comfortable, the board would take action so that we could go ahead and submit. The deadline for one of our audit submissions is December 1st, so that's why we have had it
Yes.
scheduled this way to be in
Right.
the November commission meeting. Certainly, if the board wants to take more time, we will adjust accordingly, but we did work to get it completed in the hands
okay,
of members for Thursday's meeting.
okay, and,
I don't know how we do anything else. We could say, hey, the three of us
the
here.
three felt
Yeah,
that it
It
I-
was
was,
a consensus
I don't-
vote, we have no, can't be official.
That's right.
yeah, well, our consensus is that it is in order, okay. So, is that okay, members?
Yeah.
That's good with me.
I just
All
want to
right.
have just a really sad comment, it isn't really directly related to the audit.
What's that?
Um,
Okay.
I'm really glad we had the fund balance and that we allowed that to be used to pay for the move. You didn't have to ask every jurisdiction for cash,
Yes,
and that's what you try to avoid. That's another reason you have the fund balance.
that's correct,
So I just want to keep that in mind,
yeah,
that when things come up, there may be something that just appears out of nowhere about pensions or something that you have to have. But you vote, everybody voted to do that.
Yeah.
And it got placed back in April, in a short period of time. And
okay,
that's what I mean, it's to avoid having to ask, particularly the smaller counties,
right,
for some big chunk of money, or to them, a big chunk of money.
okay,
So just, that's why when we go over the fund balance descriptions and how it's used and all that works well, and it also shows good solid financial responsibility.
absolutely.
So that's why it's important.
I appreciate the comment. All right, thank you very much. Thank you again, Mark, for presentation and your hard work here in this regard. We appreciate the good report.
Mr. Chairman,
Yes, sir.
if we're gonna sit here and say, you know, we obviously could not vote on it,
Yeah,
I'm not too sure it wouldn't be a good idea if Mark didn't make this presentation to the executive committee.
That's in order.
PlanRVA.
that would be fine if he would.
Uh,
That would be fine, which has historically been the case.
You don't have an executive committee?
Because it's right after the TPO meeting, the commission meets
Oh,
right
that's
after
right, you
TPO.
moved it this month, didn't you?
Oh,
You're gonna be back to back, right?
Yes,
okay,
I'm sorry, but how long are we gonna be here?
we have lunch for you.
Okay, Thursday.
Okay. okay,
I'm not gonna be able to attend both of them, but that's,
Well, that's fine.
was that,
okay,
Well, I mean, I'll just bring it up, and I hope I'm not making something happen by saying it out loud, but I mean, I am well aware that, one, it's a long agenda for the TPO meeting, and two, I'm well aware that next week is election day and it is a busy time for many of our members, so we have only once discussed what happens if we don't have a quorum on Thursday, so
Okay.
it may well be that we'll have to, I hope that that's not the case, but we may have to exercise a plan B.
why did
Rich,
you move, what, I'm trying, Don't recall why we moved it
Because
up.
of the conflicts with the VACO conference and the,
Okay, that's right.
and
Okay.
it's just trying to be respectful of everyone's schedules. So the consensus was it's easier to do a marathon instead of.
Okay,
Which
good.
is the PDC first and the TPO second?
TPO's first,
TPO first.
yes, and then the PDC's immediately following or 11 o'clock. And the audit is the only thing on the agenda of voting
Okay, Martha.
substance.
Okay, thank you, Martha. If you,
For the PDC?
Yes.
Okay, I mean, that'll be too big. All right.
good, all right. Well, thank you, Martha. I appreciate you
Sure,
sharing that,
yeah.
if you would, as you mentioned. All right, thank you, Mark, again.
Okay.
We appreciate your time and efforts. And so we're done with item 3. Now we can
All right,
move
thank
on
you.
to,
Thank you
thank
so
you for
much,
your time
Mark.
today.
Appreciate it.
Appreciate it.
Thank
And we'll move on to item 4.
Yeah, I'll take this quickly
you would,
just to keep Dan.
Okay, please.
If he's
Ms. Shepherd.
having a little bit of a hard time talking.
That's
with me,
okay,
so
Dan. You don't have to
we're
talk.
just-
You have a good person here who.
I think what I will
Okay.
share is that the
Yes, ma'am.
9:30 financial statements
Okay.
will be distributed to the committee as soon as they're finalized and
Okay.
I've had a chance to review. The audit took priority to be able to get it
Understandably.
finalized and distributed, so
Mhm.
we're not expecting there to be bad news, if I can put it that way. So we'll certainly will communicate with the committee as with the financial statements as soon as they're available and any kind of summary points that if we need to alert you to anything in
Yeah.
particular. I was telling Mr. Holland before the meeting started that I'm really pleased to say, thanks to a team effort of Diane and many other people on staff, we've been able to fill all but 2 of the open positions between transitioning and the approved positions by the board. And so our final 2 positions that we have open are the MPO administrator position, which is to backfill Chet moving over to CBTA, and then the grant specialist position. So we're on track, I would say, as far as our schedule for our timeline for recruitment, and we're looking forward to be able to make an announcement about those 2 positions. The MPO position, I'll say early December is kind of what we're targeting for, and then the grant position early in the first quarter of the fiscal year. So we're looking forward to that and have a great set of new staff members on board that have just dove right in and are doing great work and billing and all those kinds of things. So we'll start to see that really, I think, shape out in the Q2 financials, because start dates varied in August and September for Q1. So.
Very good. Thank you, Martha, for that information. All
And
right.
then I'll just state on the budget part, if I
Yeah,
can, on
please.
FY 2025.
Please. Go.
Yeah, so with the financial, our plan is that at the next finance committee meeting, we'll be able to review the quarterly financials as well as a budget review for the current fiscal year, so we can do any adjustments that we need to make. We have a number of pending grant applications right now that are also possibilities from a shift in our earlier preview or expectation of revenue. So we'll be able to update you on that. And then as far as the 2025 budget, we're entering the season of submitting requests to our member jurisdictions.
Okay.
And so I wanted to get consensus from this committee. We have historically, with the exception of, I think, a year or 2 during COVID, in my tenure here, we've historically had an assessment for local member dues at 55 cents per capita, and an RRTPO special assessment of 5 cents per capita. Largely, I think one of the reasons why we had those split out separately is that the MPO service area was different than the PDC service area. You all remember we expanded the boundaries, and so they are the same now. And so really the math is the same. It's 60 cents per capita for the jurisdictions. And so we wanted to get consensus from this group and then at Thursday's meeting as to whether or not we should just proceed with submitting requests for 60 cents per capita. I'll do a little footnote that for Chesterfield County, the population is adjusted based on the greater Tri-Cities
Yes.
MPO membership. And so we balance, or we reduce the total Chesterfield population before
Yeah,
we apply
to not
the
overcharge.
assessment. And then similarly in Hanover County, we separate the town's population, and I think we have a pretty good methodology and working relationship with staff on both to make sure that the calculations are in sync with, I believe since CBTA was formed, we now use that school calculation that
yeah, that's right.
everybody's kind of grown to trust. So, and as just a point of information, I probably won't go into this detail with the full board, but our bylaws and charters state that the member dues are based on the Weldon Cooper
Yes.
census estimates. So that is what we use per those governance documents. Weldon Cooper releases census figures each January-ish, and they're dated for the previous July. So we will be using, for this upcoming submission, the July 1, 2022 population estimates, because they are the most up-to-date that have been released. So it always sounds kind of counterintuitive that we're that far behind, but that is because we're required to use Weldon Cooper, and that's the schedule that they release the figures.
Okay, so then we probably already know what the increase is gonna be to PlanRVA then.
Yeah, and I can distribute those figures if you'd like to see kind of a trend of the last couple of years and what the implications are. For most jurisdictions, because you enjoy a population increase, the figure goes up proportionate with your population. In Charles City, we have had a decline. So, but overall, it's by a couple of people, to be honest with you.
I just mentioned a note, it's been 10 years, but Henrico County, good 10 years ago, contested the Weldon Cooper statistics for Henrico. And I always want to mention that, though, you can do that if you think you're undercounted or overcounted. We were undercounted dramatically, and we won. But so Weldon Cooper's numbers, I know they're required to be used, but if for whatever reason, and when it comes out, I'm sure somebody at your county would say something. There's jumped all over it. It was easily 10 years ago, maybe 12.
Well, each of our jurisdictions has to go through with PlanRVA exactly what our citizens go through with our counties. The rate didn't change, but the taxes went up. It's gonna be the same thing here. Each jurisdiction's gonna be paying more.
That's a good point.
But at the same rate.
That's a good point, and you
That's
speak to, go ahead.
Yeah, no, that's it. I mean, yeah, the dollar amount increases because that the underlying population for the jurisdictions goes up.
Yeah, so given that, is it something we should look at going in the future in terms of a better data source? What do you think?
I think does the federal government also use Weldon Cooper? They're supposed to be
The I've heard, but is there something better?
I mean, it's difficult because the census releases 10-year data, and then the Weldon Cooper takes history of past growth trends and applies that to the future. And so if you have a different set of factors that, drive growth or slow growth, then that's when those factors have to be reported to Weldon Cooper, and that process is important. I think since that happened, the localities have really stayed on top of.
Well, that's what I mean. Your whoever's run, your county administrator or whatever.
Okay.
Should take note of that. All I know is that we contested it and we won.
Okay.
Because they miscalculated it. We had figures and statistics, but a lot of organizations, I think the federal government uses Weldon Cooper, for everything. Pretty much everything. So, of course, it's valuable if you're undercounted.
Okay.
Or even if you're overcounted,
We want to do it right. Want to be as best we
be as
can.
close as possible.
I'll look into that.
We could do maybe a discussion at the December board meeting also about.
Let's do that.
The population.
Let's do that
the-
for educational
I
purposes.
think, and I think there's some really interesting, I think Saren would probably love to talk with you all about this. There's some really interesting happening. The population center of the region is actually moving south because of the growth in Chesterfield. And so it is kind of interesting to see over time, New Kent's our fastest growing county, but because they are relatively small, the net numbers aren't that high, but from a rate perspective. So it's an interesting, I think, set of information to think about and talk about.
I would like to hear it. Thank you.
And it's gonna
Thank you.
continue because you got all the land.
Right.
Yeah, that's true. We do have
Yeah.
some. Yeah, you can come,
Chesapeake.
Chesapeake. You're welcome, you're welcome.
We thank you for your contributions.
We don't mind paying.
So,
Okay.
Saying that,
so I will
So we
say
got just as
that
much land, but we're not gonna use ours.
I do expect in the next week or so, we'll probably get our invitation to submit funds from Henrico, because they're the first ones
We've
that
got-
we've
we
already
received it,
gotten it.
yeah.
Okay, yeah, so typically it's like by Thanksgiving or so, that application goes in, that's the first, and then the rest of them kind of fall in line, and so having this discussion about direction to staff on how to submit
Okay.
the rate for this on Thursday is important.
Okay, so yeah.
I'm gonna go down memory lane one more time with you guys.
Okay. Okay.
That was when the check came in and Henrico paid like $57,000 or $58,000. This was years ago, and the guy took the check and his
Oh.
wife washed it, and
Mm-hmm.
we got the check back, and then the PDC said, "You haven't sent your money." Oh, yes, we have. Oh, yeah. And that sort of got the ball rolling. The guy that was the treasurer,
Mm-hmm. Mm-hmm.
worked with his wife and cooed with his wife, and she was working at the bank and he was working.
Mm-hmm.
Okay, just
Okay,
down memory lane.
thanks for that history.
And I actually will mention one other thing,
Yes,
Oh,
just
please.
because it's, and I'm sorry.
Are they paying
That's
it
okay.
back still?
Is it down to, it's down to a very small amount that
I
might
think it
even
got to the
be-
point where we,
I thought that was written off.
yeah,
Did you
yeah,
write,
it's-
no, you wrote it off, huh?
I think the last time we reviewed it, the balance was so low that it would, the cost to pursue any kind of a action to force repay would be more than the amount that they owed us.
I know his son was paying it. Anyway, just thought I'd mention.
All right,
Thank you.
all right, okay.
Last thing
Anything
I'll mention is,
else? Okay,
with regard to, just the audit, this is the, Dan, forgive me, it's the this is the second year in a 3-year engagement with Dunham Camp and Roads. We did set up a special ad hoc, special contracts and services committee that is meeting for the first time on November 30th. Does that sound right, Janice? Yeah. That committee will be taking a look at the schedule for renewal of different RFPs and contracts, that kind of thing, so that we can really have the proposal. I know that we did go through a competitive RFP process the last time that we ended up with Dunham Roads, and it mentions it in the audit report. We've been with them for 20+ years, mostly because when we have gone through the competitive process, they are always the most competitive from a price perspective. But we just wanted to mention that it'll be in the queue again next year to do another review, and that'll be part of the full package that committee will be overseeing. So.
okay, very good, thank you.
Yep.
Good deal.
And
All
I
right,
think,
item 6, fund balance and updates there.
so we had a lot of discussion at the last meeting about kind of the principles that should drive
Yes.
that. And now that we have the audit report, the thought is that at the next committee meeting, that will be dedicated to the fund balance policy, what should be included in it.
Okay,
And that would be informing the FY 2025 budget development process, that we go into that fiscal year knowing what our goals are.
okay, very good, very good. Any comments or questions on that? Certainly, and we also discussed, what if options too, something that hopefully we can contemplate and or outline, what if options, once we've exhausted that, as Ms. O'Bannon mentioned, the fund balance, if you
Well, if
will.
everybody's voting on it, I think that would be the bottom line, just everybody votes,
Okay.
making any decisions.
Okay,
But I won't be here.
okay.
That's right, you're the only one that's
Sorry.
gonna be around.
I'm
so-
sorry, I'm sorry y'all, sorry y'all leaving me, but
Actually,
anyway.
the manager's
Of the
asking
3
to go to
years.
the audit committee for Henrico, so
Okay.
hey.
Oh.
Wonderful,
I'm big on audits.
that's good. All right, good deal. Anything else? For the good.
I'm
Sir?
gonna bring up one thing
Please
that
do.
just came up today.
Yes, sir.
Is it in our bylaws how many members we have to have on this committee?
No,
I don't think
I
so.
would suggest you dropping it to 5, so instead, it's always better to
That's a
have an
great
odd
idea.
number.
I agree, appreciate, odd numbers better, you're right.
Yeah, 6-member
Odd,
committee is
yeah,
an awkward
6 is awkward,
situation.
we'll have to deal with that in January unfortunately, since.
Well, that's fine, I'm just
But that's
offering
a
this,
great
I'm
idea.
No, I think it's
offering
a
this
great
as,
time to do it.
yeah.
'cause, well, yeah.
is a
You're right.
situation that showed up today, but it also can also show up with a full committee with 5 votes and.
Yeah.
I couldn't agree more. Thank you. Appreciate it. Any other suggestions, ideas? Great, great, great. Well, I greatly appreciate your taking the time to be here today and all the good discussion. Thank you, Martha, Dan, team, and thank everyone for all your wonderful efforts. And we are here if there are no other discussions, as Ms. O'Bannon used to say. Anything else you want to discuss?
If there's nothing else.
Nothing else?
For this committee.
Wait a minute, we'll get one out. This is bad. We'll get one out. Thank you.
Robert's Rules of
Thank you,
Order.
Rob.
That's right. We gotta do the rules. Thank you.
That,
Thank you.
now, the meeting's closed, you and I are gonna have to make sure we vote before we're gone to the end of the year to keep Jim Holland.